are seeing the wise people in the East continuing to buy, whilst Western central banks are not buying any gold, and even normal investors in the West are not buying.
Ladies and gentlemen, another month has passed. We are still witnessing complete madness. I welcome Egon von Greyerz there. In Britain, I suspect. Egon, good to see you. How are you?
Now I'm in Switzerland, actually, Jan. Yeah, and one of my homelands, and very pleased to be here. No, I'm fine, thank you. Better than the world is, but we have to keep sane in an insane world. So let's see if we can help people understand what's happening.
We have to continue to call in the desert, Egon.
Yeah.
So the market is, at least the gold and silver market, doing what we expected. Silver after a little correction, and gold on the way up again. But there is something that still makes many people curious, and this is the stock market. You saw a week ago or so, the Dow Jones really reached 40,000 points. My theory is, while they cannot keep the gold and silver longer downwards, they can keep the stock market up, especially with AI manipulation and shifting to focus on some big tech stocks. So they manage to hold up the stock market. What do you think?
You know that this defies all logic, but of course, it is just proving, as you said, Jan, that you can actually get the stock market to any level by printing enough money. And that's what we are seeing. We have inflated money supply, but manifold in this century. You know, you think about, Jan, the Dow. The Dow was when I'm just looking here at the chart now. When the Nikkei was 40,000 in '89, it was. I'm looking at this chart. Then the Dow was 3,000. And you know, the Nikkei went down, of course, to crash, then back up now again, and the Dow has just continued climbing for the last 50 years or whatever you want to measure, thanks to just funny money, and that's what we're going to continue to see until it turns. I think we're near a turn, but I've been saying that for a while, but people will be shocked when it happens. If it happens tomorrow or in 3 months' time or in 6 months' time, it doesn't matter. The risk is enormous. It's just based on fake money and enormous liquidity in the financial system. But that liquidity can turn around to illiquidity very quickly when we see problems in the banking system and in the whole of the financial system. Yeah.
And I would expect to re-emerge such problems. And one reason for that are the interest rates, but we come to this later. Egon, let's have a look at the bubble country number one, the USA, where the consumer, also one topic that we addressed in the past a number of times, is coming under continued pressure. There's one article with really nice graphics here on Zero Hedge. What do we see here? First, the US unemployment rate, still low, but it seems to be on the way up now. Second graphic, very dangerous for many people, the average or the mortgage rate, and here the average mortgage rate. So there is a gap that has to pick up and will continue to bring more and more people under pressure. Consumer credit versus personal savings. Credit rising, of course. Savings close to all-time low. Consumer delinquency versus the interest on credit cards. Both rising and remaining high. And finally, this graphic here. More and more people have to take a second job. Also one source for the so-called employment miracle in the US. I think those are really interesting and dangerous charts. And for me, one sign, okay, it lasted very long, Egon, but that is built on clay. This whole system in the US is built on clay foot. What do you think?
Yeah, all of these graphs that you have been showing here, man, that's real dynamite, absolute dynamite.
Yes.
I mean, you take the unemployment rate. I mean, it's not for real, Jan. You know that there are 100 million people in the US capable of working who are not working, because once they've been unemployed for more than 6 months and stop looking for a job, they don't count as unemployed anymore. They're taken out of the system, taken out of the statistics. So you're looking here at 100 million people who are just have no jobs. On the other hand, as you show, the ones who are working, they need to work, many of them, in more than one job just to keep ends meet and to pay for their outgoings. But and at the same time, yes, mortgage rates are not hurting the average person yet, but they certainly will, because interest rates, in my view, are going to stay high for a foreseeable future. Might be short-term rate cuts, but long-term the trend is strongly up. And of course, this consumer credit is going to kill the public, and therefore the consumer credit, people in the US pay about 20-25%. On the credit card, for example. But the biggest worry is, of course, the banking system. You take the delinquency rate, that is going to continue up. And if we add to that the problems in the housing market and in the also offices, that's going to hurt the banks in a very, very serious way in the coming months and year.
I agree, Egon, and we see already the weakness in the retail sector. Let me quote one thing from Trading Economics here. Retail sales in the US were unchanged month over month in April 24, following a downwardly revised 0.6% gain in March and defying market forecasts of 0.4% rise, suggesting consumer spending have slightly eased. 7 out of 13 categories posted declines. And I will bring another link into the description box that more and more retail companies like Walmart, Target, and the big chains, they have to offer special offers to lure the people to buy stuff, because the situation is becoming harder and harder for them.
Well, you know, Jan, walking around high street or shopping malls in the US, you see the number of shops, you see the number of restaurants, you see the number of cafes everywhere. And then the output and the choice for the consumer of fashion and of gadgets. I mean, it's just unlimited. All of this has emerged in the last 30 years or so, all based on expansion in money supply. That means expansion in credit. People haven't had the money to buy all of this for. Only marginal amount comes from their own savings. It comes from just an expansion of credit. And that's why, you know, this all adds up. So, and that credit is never going to be repaid. They can't afford to repay it. As unemployment increases, people start losing their jobs. Many, as we said, are already working 2 jobs, and many are not working at all and living on unemployment benefits. That just doesn't add up. Banks are not going to get the money back. People are not going to afford to pay their loans back. And that's when we will see the banking system coming under real pressure and probably not surviving in its present form. That will happen at some point in the next 5 years or so. A real problem in the financial system.
And Egon, there is one important factor. We know the propaganda of the analysts, the Federal Reserve, and politicians, of course. With rate cuts, everything will be good again. We only have to lower the interest rates. But what if? Let's see what Goldman Sachs recently said, which, by the way, fits to your statement that we will see higher interest rates for longer and even increasing. CEO David Salomon said on Wednesday he does not expect the Federal Reserve to cut interest rates this year. I'm still at 0 cuts, Salomon said at the Boston College event. I think we are set for a stickier inflation. His comments came after Federal Reserve policymakers said on Tuesday the US central bank should wait several more months to ensure that inflation really is back on track to its 2% target before cutting interest rates. And we know
Yes.
what that means, Egon. No cutting is absolutely fatal. We saw this chart of the escalating interest rates on the US debt, and not only the state debt, the private debt. With such a statement, they really must have something else in mind. Maybe they expect World War III soon and don't care about the economy at all. I think so, by the way. What do you think?
Well, Jan, we are in front of a major disaster happening. Let's be clear, interest rates peaked in 1980 and were coming down for 40 years to about 2021. That was the bottom. We are now likely to see a trend of probably uptrend in interest rates of 30, 40 years. So will inflation increase at the same time. It won't be a straight line. There will be corrections. There will be interest rate cuts within that up cycle. But overall, we will see much more higher rates for the simple reason that inflation is here to stay. I mean, this low inflation that they're showing now down to 3% or whatever, but that is totally artificial. The real inflation is much higher. Every consumer knows that prices are going up by a lot more. Of course, the dilemma the US has on the one hand, they need to increase or decrease interest rates or reduce interest rates in order for the economy to survive and be able to pay interest rates, both for the government and for individuals. On the other hand, the continued push on inflation will mean that rates are going to go up. And that will, of course, bankrupt the US and bankrupt individuals also. And I have said it many times in our discussions, and I'll say it again, the Fed will lose control of interest rates. The market will start dumping bonds, especially the long end of bonds. And then that will push up also the short rates. And the US, with its debt now of almost mid-30 trillion already, and as I forecast, it will be up to 100 trillion by probably 2036, or probably before that, just by extrapolating the current trend. That is a level that, of course, the US is bankrupt. How they will solve that is through more money printing, but as we both know, you can't solve a debt problem by more debt. So that's why they are now caught in a situation which they can't get out of.
Absolutely. So the perfect circumstances for precious metals, but still, interestingly, as you also said it in the past, who is buying? At least very few in the West. Let's see.
Yeah.
This graphic here from one of your recent articles, Egon, we see the weekly transparent gold holdings here from Gold Charts R Us, and they continue down while the gold price is now close back to 2,400. At least in the Western countries, there is very little buying, but somewhere else there is. Let's see this also. And then I need your comment, Egon. And where does it go? Of course, to Russia and China, for instance. Here we see the total Russian gold holdings of the central bank, flat for a while, but in April they increased by 3 tons. Here is China increasing with big jumps, but we know that Chinese data, they probably have a lot more. So there's one thing for sure, it goes to China and Russia. And at the same time, I will put another link into the description box. China is dumping US treasuries. For instance, they saw what happened to the Russian reserves when they were seized, 300 billion. So this is putting big pressure on the USA, but on the other hand is supporting the precious metal prices. So it seems we have more wise people in the East than in the West.
Yeah, and this is so fascinating. You know, if somebody asked us a year ago, so if gold would reach the levels where we're at now, almost 2,400, and silver over $30, we would have expected to see massive buying from the West. But that's not the case yet. There were, and all the buying that's pushing prices up is coming basically from the East, and obviously also from the BRICS countries. But it's not just central banks buying, which is of course continuous. And as I've explained before, the fact that the US confiscated or froze Russian assets in international banks means that no central bank will ever want to put their reserves in US dollars, because they know they can lose it all whenever the US decides to freeze it. Thus, we will see a gradual move from central banks from holding dollar reserves to holding its reserves in gold. That's going to take time and be a gradual shift, but that's going to be monumental for the gold market, because you're talking about a permanent shift here and into many, many thousands of tons of gold, which are not available, of course, at the current price. The only way to get more gold is not through new production, as we have talked about before, but because there isn't more than 3,500 tons to produce every year. The only way that these central banks can get more gold is through a higher price. They will have to pay more, and therefore they will automatically, at the higher price, they get more gold for their money, but they don't get more in weight. They get more in money terms. And that movement is going to go on for a long time. Then, of course, China, the retail sector in China is also buying heavily gold. Yeah. And India is buying a lot of silver, especially. So we are seeing the wise people in the East continuing to buy, whilst Western central banks are not buying any gold, and even normal investors in the West are not buying. What is interesting, though, Jan, is that we're having continuous discussions with major investors at different levels. And we've just had a round of discussions with major international wealth managers. These could be either wealth management companies that have the biggest billionaires, etc., as clients, or it could be some of the major banks that have a wealth management departments. And they're telling us, number one, they are now interested in looking at gold for their clients. And the clients are also starting to ask for gold and the best way to buy gold. And this is why we're having the discussions with them, because, of course, we have a system to help them with that. So that's a development that we're going to see in the next few years. Interesting, Jan, is that family offices, the sector of family offices, which are advised by these wealth managers, family office market is bigger than the hedge fund market and the private equity market together. So you're talking about a massive market now here on top of the central banks and sovereign wealth funds and BRIC countries. Another sector that is now starting to look seriously at holding physical gold here. And that's a big market, as I said. So that's another sector or source of funds which will come into the gold market. Again, it will be gradual. It's not going to happen overnight. But combine that with the fact that central banks are doing all they can to destroy the value of money and support the gold price by printing more and more money. So that will automatically support the gold price for many years to come, because these deficits are not going to disappear. They're going to continue for many years. So there are so many factors, Jan, now supporting gold. As you know, I'm not a gold bug. I'm actually someone who just sees gold as the best method to preserve wealth. But I see gold as taking a major role in investment markets and as well as wealth protection markets in coming years now.
Very interesting observation with the family offices, Egon, who has a lot, of course, has a lot to lose. And if they do not prepare, they will lose a lot. There's another interesting observation we saw in the past, that when gold increased or had a nice jump, then the commercials came in, shorted, then it fell down and they covered. This movement is not anymore as strong as in the past, not at all. And I think we discussed this also in one of our past discussions. The price setting power has shifted to the east also. We see their premiums, so there will be arbitrage. They have to take precious metals from London and the US. I think most of that will go through the Emirates. They deal with everybody, of course. So the price setting power moves to the east also, and it's really a strong case for the precious metals. So what can the West do? The only thing they can do when they cannot win this war, and they for sure will lose it, they can only try to distract the people. What we said at the beginning, keep the markets up with funny money and try to keep this market calm. So as we have it now, gold and silver, gold at record prices, silver not yet, but still a very quiet market. No euphoria, still a good time to buy. What do you think?
Well, it definitely is. We have been in the gold market for wealth preservation purposes in a major way for 25 years. And I tell my clients, we tell my colleagues that we haven't even started yet. Well, we've seen excellent, fantastic growth over the 25 years. But and the gold price is up 7, 8, 9 times since we started, depending on the currency you measure it in. But in the way I look at this and what we have been discussing now, the era for gold is starting now, and the major moves in gold is starting now, and the major move into from world financial asset into gold is starting now. Now is financial assets, only 0.5% of world financial assets are in gold today. Only 0.5%. If that increases to 1 or 1.5%, that is more gold than is ever available, and the only way to satisfy that is through much higher prices. And that's going to happen just because of the demand. That's not going to be speculative. These are going to be secular shifts into holding gold for the long term. So we're not talking about now futures markets or speculators coming in. But there are major substantial shifts from big investors. It's not going to be one move. There will be corrections, and some of them not now. We're not far from a big correction yet. We're going to see much more move to the upside, in my view, before we see a big correction. But there will be correction in these moves also. So investors shouldn't be surprised. Better to buy when it's low, like now, than to wait for it to be much higher. But the long-term trend of the precious metals markets is strongly up. That's a fact. And of course, silver, which is more speculative and more volatile, will move, and the up move will move 2-3 times as fast, but will also correct 2-3 times as fast. So investors must be aware of that. That it's much better. So you sleep better at night if you hold gold than if you hold silver. But if you want a real roller coaster ride, silver is very exciting.
Absolutely, and I chose this background for a reason. I really like silver. So Egon, we are in the perfect time for precious metals. I can only advise the people to hold on what you have and continue adding. We are in dangerous times. Anything can happen with Russia, Ukraine, Taiwan.
Yes.
Who knows? We have so many black swans. We have to think about unthinkable events, literally. Anything is possible. Therefore, rather prepare a bit more than you would usually do. Final statement, Egon?
Yes, and also we have to remember when countries are under pressure, which the US is financially and politically also, with the election coming up, and geopolitically with the risk of losing a war, an indirect war with Russia that they're having now. All of that can lead to happenings that will be totally unexpected. Normally countries under such pressure can easily start a war to divert attention away from the financial situation and blame the war for everything. So these are the kinds of events that we can see in the next year or so, and especially the election and the Trump situation. The 50-50 between the voters. between Trump and Biden, nobody's going to accept the outcome. So that could lead to social unrest and real problems in the US too. So we have enough on our plates, Jan, to create very much of unrest in financial markets, in the economy, and socially also. This is why people got to look after their house and prepare. At least they can protect their financial side by holding some precious metals. It doesn't solve all the problems, but it solves a part of the problem.
At least if you don't have the financial problem, that is a big problem less. Thank you for today, Egon. That was a good discussion. And of course, the topics, they will not run out in the next months. Let's hope that some common sense returns. Thank you for today, and grüezi to Switzerland.
Well, thank you very much, Jan. Always good to talk to you, and we will have so much to talk about
Oh, yes.
in the next few months, that's for certain.
Yes. Thank you, Egon. Bye-bye.